All right, guys, good morning. It's Friday the 13th. So it is Friday, January 13th. It's about 8:30 here, so we're doing another late start. No bathrobe today. I'm at the office right now, getting started. Usually Fridays are a little slower, so I'm looking forward to catching up on this mountain of paperwork that I've got over here. But let's get into it. So today is a very interesting day for the market. Lots of earnings and lots of reporting. We're going to get to the banking sector in a minute because that's definitely the biggest news of the day. A couple stories I want to touch on before we get to that is, again, the gold market. So gold just keeps going higher, higher, and higher. Gold is at 1900 as of this video. It has touched about 1912. So it hit about 1912 this morning. That's record breaking. So, well, not, and I shouldn't say record breaking, but that is all-time high levels. Those are levels that you don't normally see unless there's a shutdown or a massive stock market crash. Regardless of what you think the market is doing, it is not in free fall. Those are numbers that usually designate free fall. So this is really interesting. This could just be the metal markets. It could be a supply issue. It could be the fact that people are leaving things like Bitcoin and going into commodities. It could be that people are leaving the stock market and going into commodities. But these kinds of prices during this type of market is very unheard of. You can go back and look at the charts. These numbers only get hit when something really bad is happening or about to happen. But even as a predictor, this is very high. Gold did actually start to rise. So if you actually look at gold markets, the gold market actually did start to rise pretty substantially before the housing crash of 2007. It had been on the rise for years, and it was around like 1400, if I recall correctly, right before the crash. And then post-crash is when it started skyrocketing. That's where it shot up to record levels of about $2,000 an ounce. And that's when all the we buy gold places started popping up, was because gold was just worth so much. You could literally just buy rings off of people and make money. This kind of number is very concerning and very interesting. I don't really know what it's going to have and what play it's going to have on the market, but it's definitely something. It's definitely an indicator of something. It could just be the fact that, yeah, people are leaving the stock market and crypto and going into gold, or it could be a dark cloud on the horizon. I'm still very optimistic. I've kind of changed my tune over the last couple weeks, maybe even the last couple months, that the economy actually isn't as bad as people assume. If you've watched my previous videos, you agree with that, or you've seen me say that. So I'm still kind of sticking to my guns, and some of the other stories I'll have here in a minute, I think, kind of highlight that as well. So let's get to some of the others. Really quick, Delta is up $2 billion at the end of the fourth quarter. Labor is definitely dragging it. That's not a surprise, and they're actually in negotiation with their pilots. The pilots union is demanding another, I think, 30% raise. So that's going to definitely drag their profits. But as far as overall volume and travel, they are up. So again, this isn't a surprise. A couple of days ago, we talked about American Airlines. American Airlines was up as well. So Delta is continuing this trend. Caterpillar has been upgraded by Bank of America. This is very interesting because obviously Caterpillar is huge in construction, new homes, commercial, whatever it is. They're being upgraded. Their outlook is looking very promising. That's also not surprising because China does buy a lot of Caterpillar products. So if the economy is reopening in China, you can expect that there will be more purchasing internationally as well. Europe's heat wave continues. Resorts are still without snow, but that's probably playing into their hands because obviously the whole oil issue with Russia is going to be a drag. And I think the warmer weather is definitely going to be helping them. Sweden actually discovered a massive rare earth deposit. It's the largest in Europe. I don't want to oversell it, but it is about 10 million tons. So it's going to be a huge boost to the mineral market, but probably not for another 10 years. But it is interesting as this is another shift away from China. So even Europe is starting that shift, and this deposit is going to continue that. So let's get to the big earnings. So JP Morgan is definitely the darling of all the stories. Their revenues were up massively. So JP Morgan, I'm going to read you off all the notes I have. So earnings are up 3.57. per share over estimates of $3.07 a share. So they beat earnings by 50 cents a share. Their overall revenue for the fourth quarter was 35.7 billion versus 34.3 billion, which was the estimate. Jamie Dimon, though, is warning of a coming recession. I respect Jamie Dimon. The man is a titan in his industry. He's a GOAT. He knows what he's talking about. But he's been kind of sounding the drums of recession for at least a year and a half now. I would say at least a year, because I've started to hear him talk about it right around the time that Russia invaded Ukraine, that he started warning of recession. And we did have those two dips in GDP in 2022, but I would not be so bullish to say that recession is coming. The earnings are still too strong. I think he is being a little bit too cautious, and I think he's also just sticking by his guns because he said it last year and you don't want to kind of backtrack. I don't see anything that should warrant a recession in this economy. I know that that's an unpopular opinion. I know even just a few minutes ago I talked about gold. But when you're just looking at every other analytic, job market is still strong. Earnings are still strong. Wages are rising. Travel is up. Leisure is up. A couple of days ago, I reported that hospitality and leisure added 125,000 jobs just in December alone. I went to a steakhouse last weekend, packed. People with friends and family traveling to Vegas, packed. The economy is not slowing like people are saying. It's just people are spending money differently. So that's JP Morgan's numbers, very strong. Wells Fargo actually did have strong numbers. They did report only 2.86 billion, but it would have actually been 6.16 billion if they didn't have to pay 3.3 billion in fees last month. Their earnings last year at that time were 5.75 billion. So if it was not for the fees, they actually would be above earnings for last year. This isn't surprising, right? Interest rates benefit banks. They lend at higher rates. They don't need to lend as often, right? I mean, it's just a simple productivity question. If you could do the same amount of work for more profit, you're going to have a better revenue. If the interest rates are down, they have to work that much harder. They have to hire more people. They have to have more expenditures in order to hit those same values. So there's no ifs, ands, or buts about it. Interest rates benefit banks. They're going to say that it doesn't, but it clearly does. There's no way around it. It helps with their new origination loans, helps with refis, it helps with their own deposits. There's no way that higher interest rates don't benefit banks. These earnings are going to continue. Bank of America, another really strong number. So 24.66 billion versus estimated of 24.33 billion. Also another really strong quarter. So the bad ones. So what went down? Citi went down, and BlackRock went down. So Citi is a little surprising. It was pretty much mismanagement, right? They put their money in the wrong places. They invested it incorrectly. That's why their numbers are down. I think that there will be corrections in the next 1 or 2 quarters, and Citi is going to join the other banks in much higher revenue numbers. BlackRock is interesting, but also not surprising, right? BlackRock is an investment fund. They have private equity, they have stocks, they have bonds. When the greater market and the greater stock market is not doing well, it's not surprising that BlackRock is going to do poorly as well. So their total assets went down from 10.1 trillion to 8.6 trillion. So that's trillion with a T, not a B. That's how large their asset class is. So they had a large reduction in their assets from this point last year, but that's not surprising, right? Stock market has contracted. Dow Jones, S&P, NASDAQ, there's not a single a market that hasn't contracted publicly. So obviously their numbers are going to be lower as well. But I also think that's better for Main Street, right? There was a lot of debate when BlackRock and Blackstone were buying up private homes and all cash. private individuals couldn't get in. They had to outcompete. It created a very difficult housing market. So this is not a bad thing. That doesn't just happen with housing. That happens with a lot of businesses. So here locally in Utah, we often grow through M&A. And there was a company last year that we wanted to, I shouldn't say there was an individual company we wanted to buy. We wanted to buy another company to expand our portfolio. And we sent out, mailers, we sent out literature, we made cold calls. Nobody responded. Then at the end of the year, we found out that one of the companies we had wanted got bought up by a private equity firm. So it's definitely something that affects all markets. I think this is better for Main Street than Wall Street. I know a lot of people's pensions and retirement funds are with companies like BlackRock and Blackstone, but I think for the overall market, diversity is better than, large balance sheets. So I think this is going to be much better for Main Street. I think it's going to make buying businesses easier. I think it's going to be making buying homes much easier because these companies have contracted and they're going to be much more cautious with how they invest money. That's pretty much it. Today's Friday, a little bit slower, but I still got a lot to do. So I got to get to it. Hope you guys have an amazing weekend. Hope you set amazing goals. I hope you meet amazing goals. And I will see you guys first thing Monday morning, hopefully back in a bathrobe. Bye-bye.